So, welcome back after the break. One can hear me very clearly, and that is fantastic. And we will now start with the second round, which is equally important. And I'm very proud that we have one of the most innovative banks in Switzerland and the first crypto bank, Thomas Eichenberger. He couldn't resist our invitation. He told me yesterday at the speaker's dinner. So I'm very, very happy to have you, Thomas. And I wanted just to mention one thing, what I found very interesting, actually two things, on the Signum Bank. You started in Zurich and Singapore, and now they have 3 more locations. It's Luxembourg, it's Abu Dhabi, and it's Metaverse. So they have actually a location, well-staffed and nice offices in the Metaverse. So I think that's very nice. And the other thing that I found really cool, you have this B2B service for crypto, where you offer wallets and crypto services for banks that they can enhance their services. And just recently there was a new deal with PostFinance, where they now work with your capabilities in the blockchain space. And I found these are two really very good things. You're on a good way. So please give a hand to Thomas Eichenberger and his really interesting innovation panel on securitization, on tokenization.
Thank you very much, Alexander. So it's a great pleasure to moderate this panel on opportunities and challenges towards a tokenized world. And I would like to thank again for the kind invitation and also all the panelists for joining me today for the discussion. Before introducing the panelists, I'd like to give you a brief outline as to what we aim to discuss today. And you will see that we'll also very much focus on the discussion with the panelists rather than me presenting. So I hope I'm not going to disappoint you, Alex, but I'm not going to talk too much about Signum, but I'm really going to talk and focus on the topic and the panelists and their contribution to enlighten us about what tokenization has in terms of potential, but also the challenges that the topic has been facing in the past and continues to face in order to fully exploit its value. So let's start with the definition of tokenization in order to set the stage and set the scene. I think out of the numerous definitions that exist globally, I've picked one from the Boston Consulting Group, not because I'm an alumni of Boston Consulting Group, but because I think it's quite telling. They define tokenization as being the process by which an issuer mints digital tokens, each representing a fraction of an underlying digital or physical asset on a distributed ledger, a blockchain, guaranteeing transparent and immutable ownership as a result. And I think that's what is important when talking about the tokenization, that we really understand this as a process. And in an ideal world, I think tokenization or tokenization built on blockchains really has the potential to eliminate the need for central custodians or central securities depositories, because ultimately every accredited market participant can read from and write on the same decentralized database, which basically has the potential to bring quite a number of benefits to the table when it comes to operating shared financial market infrastructure of the future. So it is very important, I think, to understand, in contrast to what we have been hearing before, tokenization as such is not an asset class, but it's a process that is asset class agnostic. And hence, we're also not going to discuss about one particular asset class, but we're going to hear from the different panelists how they have made use of tokenization in order to unfold untapped potential in various different asset classes. And in that sense, tokenization is also a new way of managing and administering ownership in financial and real assets, and the next big step in the dematerialization of securities. As I said before, tokenization has been talked about a lot already for quite a number of years, and it has a number of benefits that it has promised to bring to the financial markets. One of which is simplified accessibility of currently hard-to-access asset classes, thanks to fractionalization. And I mean, fractionalization has existed before, but tokenization is really meant to provide cost-efficient, convenient, and simple fractionalization of ownership. At the same time, tokenization is also meant to eliminate T+2 settlement and counterparty risk, thanks to atomic settlement on-chain, which basically means that both the asset lag and the payment lag of a transaction are meant to settle instantaneously in one single block on the blockchain, which basically means that transactions are only being executed if both parties are capable of delivering their lag, which quite significantly, as I said, reduces counterparty risk and increases speed of settlement, and also, I think, eliminates the need for central clearinghouses. And then finally, tokenization is also meant to bring quite significant cost efficiencies to operating financial market infrastructure and managing securities, especially also when it comes to administering corporate actions by making use of smart contracts. Let's take the use case of a dividend payment. Smart contracts are being capable of taking a snapshot at one particular point in time, even a second or a millisecond, on the ex-dividend date, for instance, based on which then dividend payments or distributions are being made automatically by the execution of that smart contract, and the dividends in terms of stable coins being automatically distributed in all the wallets that hold the respective token or hold the respective security, which can bring quite significant benefits in terms of increased efficiency of how we operate financial market infrastructure. I think the fact that tokenization is asset class agnostic can also be inferred from this chart, again from the Boston Consulting Group, but also here I think there exist many different projections as to what the total volume of tokenized assets will be at some point in the future. We can also see that here it's quite obvious that tokenization is asset class agnostic. It can be applied to listed equities, non-listed equities, but also investment funds, bonds, and all other types of financial and real assets. And I think there has rarely been a topic in financial industry recently that has had the expected growth rates and impact in these dimensions as tokenization is meant to have. Nevertheless, I think tokenization as a topic has not yet really taken off and has not yet really managed to unfold its true potential, because I think it's facing quite a number of challenges, and as we know, making amendments to financial market infrastructure, especially on a global level, requires quite a bit of alignment and quite a bit of coordination, which to some extent I believe is still missing, and I think we're going to discuss about this in a second. Now, let me introduce the panelists, and for that I'm going to move closer to you and squeeze in on the left-hand side. It's a great pleasure to welcome my colleague Fatih Bikiri, head of tokenization at Sygnum Bank. Sygnum is the world's first digital asset bank, operating out of Switzerland and Singapore initially, as Alex said, but now also running licensed operations and businesses in Singapore, in Abu Dhabi and Luxembourg. And Sygnum Bank offers a range of services centered around cryptocurrencies on the one hand side, but also tokenized assets, as we're discussing today. Then it's a great pleasure to welcome Carlo Mondani, which represents Miriam Hagman. Unfortunately, she couldn't join today because she fell sick, but I'm very glad, Carlo, that you were available on such short notice. Carlo is the head of sales digital securities at SDX, so SIX Digital Exchange. And in short, or in simple words, you could argue that SDX is a DLT-based clone of SIX, SAS, and a regulated and licensed central securities depository and exchange for dealing in tokenized assets. We have Andreas Langenecker, Senior Sales Trader, Equity Switzerland at Berner Kantonalbank, and SMEs. I think Berner Kantonalbank should be known to probably everyone, at least the Swiss domiciled individuals among you, but SMEs maybe less so. SMEs is an organized trading facility also focusing on trading tokenized assets, and I think the DLT equivalent of OTCX, the previously or still run, I think, organized trading facility for non-listed SME shares of Berner Kantonalbank. Then we have online Nicolas Plein. I hope we can see him. Great. Thanks a lot, Nicolas, for joining out of your holiday and finding time to join us today. Nicolas is the CEO of Aktionariat. Aktionariat is a young startup with a bold vision and offers a set of tools for Swiss corporates and startups to create market for their digital or DLT-based shares on their own websites. And finally, we have Daniel Koher, the only non-Swiss based or Swiss domiciled individual joining our panel today. Thanks a lot for joining. Daniel is a co-founder and chief commercial officer at Tokeny, Tokeny aims to provide the compliance infrastructure for digital assets and allows financial actors operating in private markets to compliantly issue, transfer, and manage securities using distributed ledger technology. So I think we have a lot of experts on the table in a very diverse group. I think everyone is dealing in the same topic, but everyone has taken quite a different approach. So I think it's going to be interesting to hear from the different angles and perspective how the topic has been approached. So to kick it off, I'd like to ask all the panelists, one after the other, to explain our audience a bit how you've approached the topic of tokenization with your particular institution, and also what the motivation behind was. And for that, I'd like to start with the two longest established institutions on the panel. So Carlo, if I may give you the word to explain what SDX does and what the motivation behind was.
Thank you, Thomas. Thanks to the audience. Well, really, you have alluded to that. We have definitely the DNA of an FMI and a financial market institution infrastructure. But at the same time, we are here to do something completely different to that. Of course, we are not meant to do exactly what the SIX group is doing. So on that front, under the SDX umbrella, so the SIX Digital Exchange, which is, by the way, 100% owned by SIX Group, we run 3 different business streams. The first business stream is probably the more interesting for the audience, is the one related to digital securities. So yes, we are the world's first regulated digital exchange. So I'm talking about equity and bonds on that side. So we run our CSD and our exchange. We have at the moment 7 active members. And by the way, we have the pleasure to have also BKB as part of our members. And on that side, what is good to say to this audience, that is not equity and bonds just public, but also private. So we really share with this audience the idea of the importance of private markets. And for that reason, in a certain sense, we are also doing something that is complementing what the SIS group is doing in terms of exchange, where the more probably public is very, very sticky and engraved in the DNA of the SIX group, as far as that, let's say, engravement is for SDX related to really the digital markets. So that's one part of what we do. The other 2 pillars are basically a bit more new and exploratory. The second, let's say, group of services that we are running under a different legal entity, for obvious reason probably, is under the Web3 AG. We are running services, again, for institutions, for custody and staking of cryptocurrencies, because we believe absolutely that cryptocurrencies are an asset class in itself and deserve to be served as any other asset class. And then we have the third one that is really exploratory. Now we talk about exploratory. 3 years ago, when SDX started, everything was exploratory, but I'm alluding to NFTs, so non-fungible tokens, and we are exploring the markets around real estate, voluntary carbon emissions, and collectibles in general. So that's really in a nutshell what we do. Thank you.
Perfect, thanks, Carlo. Let's move over to Andreas. I think from the outside, it may feel like you've taken a similar approach, right? You had an established business, and now you've taken part of it onto the blockchain. Is that correct, or can you maybe outline a bit what BKB has done and what the motivation was behind?
Yeah, the assumption is correct, by the way. We need to move a few years back to understand why we are stepping into that field. You mentioned OTCX. OTCX is a trading platform for non-listed equity. We heard about non-listed equity before, and we heard that in Switzerland there is not, in fact, really much money invested in non-listed equity, even though the opportunities in yield are quite big. So that is what we are doing since 20 years, and then we just realized that there is the new movement coming in. So equity can be tokenized. In the meantime, you have the legal framework in Switzerland to do so. And we have always been working at the intersection between technology and regulation and the needs of customers. And by customers, I mean, on the one hand, the investors, on the other hand, the issuers of equity. And so we stepped in there because we said we have the experience in running secondary market on a low scale, and we saw that all these initiatives for tokenized equity are in fact missing that one element, secondary market. So that's why we said we step in there and try to bring solutions.
Perfect, great, and thanks a lot also for joining the movement. I think you were even quite an early mover in the space, which is great to see. Now, jumping to Fatih and Sygnum Bank. Sygnum was established in 2018, went live when we got the banking license in August 2019. Can you tell us a bit more about how tokenization complements the suite of products and services that Sygnum offers?
Of course, thank you. So, as you already heard, at Sygnum Bank, we are really focused on providing our clients with secure access to digital assets, including fractionalized and tokenized art and collectibles, but also products from private markets. And when it comes to tokenization, we have a kind of a unique approach. So we have on the one hand side the immense potential of blockchain. On the other side, we want to leverage the existing regulation which is expressed under our license, as also we're a licensed bank in Switzerland. So for example, we are running an organized trading facility for tokenized assets, and beside that, when it comes also to AML, KYC, investor protection, and so on and so forth. So the idea is really that we can combine these two things and give, let's say, a secure and regulated gateway to these kind of assets. Not only to established investors, but also to new joiner, and we believe that this is crucial if we want to achieve mass adoption and to move in this direction. I personally believe that blockchain is here to stay. So with every use case that we launch, by we I don't mean only Sygnum, but every player in the industry, we move towards let's say, the right way to give this kind of, let's say, infrastructure the right to exist and to further develop. Yeah, and we try to push the boundaries also in the future, as we did so far.
Great, thanks. So we have heard now from 3 licensed or regulated entities what they've been doing now. Nicola, I think you've taken a slightly different approach, which shouldn't mean that all of what you do is not being done with the same seriousness and the same trust and the same conviction and confidence. But can you please outline a bit how Aktionariat differs from what we've heard so far and how you are positioning yourselves in the tokenization space?
Yes, of course, it will be a pleasure to do that. So we are not an exchange that is licensed or anything that we just heard. We are basically a technology provider. And what we did is we started with tokenizing our own shares on the 1st of February 2021. We put them on the blockchain and then made them available to be bought by the broad public. So we started by using our tools ourselves, and we have been fundraising using our tools directly through our website for a bit more than 2 years now. In the meantime, we had worked with about 70 issuers in Switzerland, so 70 companies issuing their tokenized shares through our technology. And it can be used for fundraising, obviously, but not only that, you can also use it for employee participation, but also for stakeholder engagement. And that was the basic idea of it, to create a market for your shares. So you're not only able to do it one way, to just sell your shares, but you can really create a market for your shares directly on your website. And that allows for these assets to be more liquid, because they can also be sold if the issuer allows for that. And that's what we have been doing for about 2.5 years, almost 2.5 years now. And as I said, working with about 70 issuers in Switzerland.
Great, thanks a lot. So let's close the round with Daniel. I think among the early starters or the new joiners to the game, I think you have been the one that has been into the game for the longest. I think Tokeny was established in 2017. Can you elaborate a bit on the journey that Tokeny has taken? I think you've also pivoted a bit along the way. Can you please explain how that has emerged and evolved over time?
Sure. So Tokeny is a company based in Luxembourg. We're a team of 50 people. We are backed financially by Euronext and Apex Fund Services. So our journey indeed started 6 years ago with those famous ICOs, if you remember, those utility coin offering. So at that time, the idea was to build a platform that enabled some kind of compliant onboarding of investors. You know, people were subscribing to those tokens without having passed KYC. So we built a platform to enable this digital onboarding, passing KYC, and put some form of regulation there. Then you remember also that those ICO quickly fade away. Then came this wave of wannabe STOs, which didn't work either. for obvious reasons, is that people that did SEO were expecting that people having crypto would invest into those projects, but people in crypto are gamblers. You know, they like to play casino, they like to see big movement during the day, and if you invest in a startup, obviously you invest with a vision that the entrepreneur has to use that capital to grow the value of the company, so they cannot be value increase overnight. That's the reality. So there was no match between those people having crypto and people that want to raise money. But very quickly, we really look at the infrastructure, and we believe that this infrastructure is going to really change how we do finance. Crypto is just an application that sits on the top of this infrastructure, as tokens are sitting on the top of this infrastructure as well. But this is an infrastructure play. So what Tokeny did is we look at the regulation, we look at the infrastructure, and we say, how can we enable financial instruments to be represented on the compliant way of this infrastructure? And today there are basically two ways to do that. You either do that on what we call a private chain. So it's a group of people that trust each other. They operate on this technology, so there is cryptographic mechanism to transfer value, but it's a private group. Or you do that on public. On public, obviously, you don't know the counterparty, you cannot trust them, so you need to have a mechanism to enforce compliance. If you use the existing standard that enables to present tokens on this public chain, typically what we refer to the ERC20 token, or ERC20 token is not permission. What it means is that if I send you one of these tokens, you will get it. You cannot turn it down. If I have your wallet address, I send it to your wallet, you will receive it. If you are not eligible for that security, or if you are Russian for that matter, you should not get that security. So that doesn't work. It's not compliant. So Tokeny has built a solution that enables to permission the token and enforce the compliance on public chain. So why would we do that? Because we believe that innovation will be coming from public. And this is not a judgment on private versus public. We just look at numbers. If you look, for example, one of the top private chain that exists today, network, is Corda. There are about 100 developers working on Corda. On public chain, there's around 300,000 developers. So innovation will come from public. And this is why we believe that indeed you need to have a mechanism, you need to have a standard in order to define how to operate on this infrastructure and with those securities. Without a standard, you will never achieve critical mass. And critical mass is the reason why private instruments are going on this infrastructure to indeed achieve some form of liquidity.
Great, thanks a lot, Daniel. Also, thanks also for bringing a bit of the tech jargon into the discussion. I hope everyone was able to follow, but I think ERC20 and then private and public blockchains by now hopefully should be all more or less familiar with everyone. Now, having heard about what the different institutions have been doing and why they have been following their path, let's also shed a bit more light on what use cases concretely have been brought to fruition and have been brought to light, which may also give the audience a bit of a feeling as to what is possible, right, already now and what maybe not be possible yet. We can discuss in a second, but let's discuss about what we have been able to achieve collectively in the area of tokenization so far. And I'd like to give the word back to you, Daniel, again, to maybe give us an example or two what you have been doing at Tokeny so far.
Well, obviously, we started our journey with our issuer approaching us based on the knowledge that they have of their business and how they could disrupt it. So one of the first use cases we had was real estate. You had people that had very good understanding of the real estate market and that thought that digitalization could be a disruptor for their business. And from the 80 more customers that we have, I would say that half of those customers were people that indeed had that knowledge and brought those broad assets as an investment opportunity to either people that indeed had investment in crypto or people that simply wanted to access real estate in a more affordable way instead of having to buy the full building, obviously. So starting with indeed those people that were focusing on illiquid assets that had good returns but difficulties to invest in. And then we saw a move to other form of assets, typically in the asset management world. For the reason that if you look at the asset management world, this is still a world that, from a technology perspective, is running behind. You will be surprised to see that a lot of asset servicers in the world use Excel as their main technology. So they needed to have a technology upgrade, which is what the blockchain is bringing. It's the first step, obviously, is to bring those assets and those cap table, LPs interest on chain. But the reality and the reason why they want to do that is, of course, to access more liquidity and more services around those assets. Apex, which is an investor in Tokeny, has committed to bring 10,000 funds on our platform in the next 3 years. 10,000 funds represent around 1/3 of the assets, which is around 1 trillion euro of investment. And this is not the sole asset servicer. State Street is doing the same thing, Boni is doing the same thing, DZ is doing the same thing. So you have quite a large amount of funds that will be brought on this technology, and that will start creating this ecosystem that will enable to bring technology into that. Think about the amount of assets that are locked that you cannot use for collateral purposes. You are invested in a great fund, but from an operational perspective, your asset servicer cannot collateralize it, pledge it. And of course, there is no secondary market. So if you are in default, for example, where does those lenders go in order to liquidate that position? So this technology would enable to create new opportunity, starting potentially from direct relationship, not necessarily an ecosystem. The ecosystem is to be built. You don't create a critical mass overnight, but you can start with use cases where you just need a lender and not necessarily an ecosystem, which is what collateral can represent for this market.
Perfect. So we've heard the fractionalization of real estate and then asset and fund management will be disrupted. Nicola, back to you. You said it. You have had the pleasure to have your technology being used to tokenize the shares of quite a number of SMEs and startups in Switzerland. Is there any particular one you would like to highlight or give a more broader overview as to where you see the use cases going in the equity tokenization space?
Yes, so we are experiencing a lot of demand when it comes to fundraising. So a lot of our clients are using our technology to fundraise directly through the website. Maybe the most prominent one was Farmi. Farmi is the third largest food distributor in Switzerland. They were able to raise about 4.5 million within a week. But another very interesting use case is a company called Bossinfo, very classical, typical Swiss SME IT company that has been around since more than 20 years in Switzerland with more than 40 million in revenues a year. And they use it not only to raise funds, they did it in the beginning, but now they're keeping part of the funds they raised in the market in order to finance buybacks. And thereby, they're really creating a market for their shares. So there's always a lot of liquidity to sell back shares to the company. And thereby, the company acts like a market maker for their own shares. And this is also a use case that we had in mind when we started with Aktionariat, not only the fundraising part, maybe even a bit less the fundraising part, but more the creating a market part of it. And that's why Bossinfo is a very interesting use case, because they use it exactly for that. And they were also looking at other exchanges, at more classical exchanges, and then they went with our solution, which of course makes us very, very proud. And yeah, if you want to learn more about it, I'll invite you to visit our website and have a look at it.
Perfect. So startup and SME fundraising and market making for your own shares. Third use case, now Fatih, I think you said it before, Signum is active across art and collectibles and private markets. You want to highlight a few examples of projects that we've done or are in the progress of doing?
Of course, happy to do so. So I would like to mention the most famous project that we did, which was the Picasso token. So back then, this was really groundbreaking. With tokenization, we gave direct access to an underlying asset, and I still believe that art is a very attractive investment class with a very good risk-return profile. And currently, we are working on a very interesting project. I really look forward to bring this project alive. It's also groundbreaking. It's across different jurisdictions with a very strong partner who knows the private markets very well. And stay tuned, and I look forward to talk about it soon.
Great, perfect. Thanks, Fatih. Now, Andreas, on the SMEX side.
Well, yeah, for us, it's a bit of a different approach. If you're talking tokenization, there is that possibility of bringing new asset classes, making them investable. What we are doing is, in fact, just making existing processes, better, easier, and faster. So if you buy a stock today at a stock exchange, the change of ownership is going to be the day after tomorrow. And after that, there is that process of you getting registered into the share register, which takes another couple of days in the best case. And what we achieved today with the tokenized share that has been bought on SMEX is that this is really done atomic. So we really had a customer that was buying a share around midday, and the company had a general assembly the same day at 6 p.m. And the shareholder was able to participate there and, in fact, execute his shareholders' rights. which is, in my opinion, really groundbreaking.
Agree, absolutely. So for you, it's also more the infrastructure game that you're playing.
Exactly. Yeah.
Great. And finally, Carlo, I think SDX also had quite a number of important and impressive announcements recently, especially on the bond issuance side of things. Absolutely. Is there anything you want to highlight? Maybe the city of Lugano or?
Yeah, absolutely. That's really a very important milestone, at least in our opinion, because I mean, I want just to add a little caveat, because we share in SDX the same vision, the fact that the public blockchain is the future, but at the same time we need to be mindful and understand where the decision were taken almost 2 years ago with FINMA to run an exchange. So when we decided to run an exchange, more or less the only option was to run on R3 Corda, which is a private blockchain. So it's a very restricted chain where people know each other, as Daniel said, and this was seen as a secure environment to start to test what blockchain means for financial markets. So with that in mind, now our challenge is a bit dual, in the sense that we are here as a market infrastructure to handle the market from the traditional finance and the traditional assets that are sitting in the exchange, to tokenize these assets and move into the new world. That's one point. And then, of course, to handle at the same time what is coming new from NFTs, from crypto, and the like. So at the same time, you can see that we need to comply heavily with the regulators. And by all means, I think that regulator and tax are also here to stay, good or bad, but that's the reality. So I believe that at some point regulators will have a say, also because regulators at the moment are a bit not, let's say not all have the same opinion. If you go to the United States, you see that SEC is quite harsh versus the blockchain business. I think that in Switzerland we are quite lucky that we have a regulator that is really forward-looking. Now we wait to see what MiCA will bring, and again, this in a certain sense a big challenge for an exchange, but also to the players in this market to really adapt and understand where we need to go collectively. So that's one part. The other part, really moving to the really infrastructural play, the point is for us is pretty simple, and we see more and more consensus around this idea. At some point, everything that has a value will be tokenized, being Bitcoin, financial instruments, of course, currencies. We have more and more conversation around wholesale CBDC that will solve the problem of the cash on chain, just for the atomic settlement mentioned before. So we have a number of assets that will be digitalized, tokenized. And then we also believe that at some point, at least in the short term, there won't be just a winner. We have a number of networks, private, hybrid, and public, that are there at some point to coexist. So what is the challenge and the big, in the sense, opportunity for SDX is really to build an infrastructure that is ledger agnostic. So we want to build something that is able to simply cross-move these assets from one chain to another chain in a seamless way, in a compliant way, from different chains. So this interoperability is really what we are looking for in the future. And to the Lugano bonds, really 3 seconds, it's really important to say that the Lugano bond has achieved, like many other, the fact that it's digitally native, one single prospectus, dual listed on both exchange, digital and traditional, to just not penalize any players in terms of liquidity, also in terms of trading, because atomic settlement is nice, but if you go outside today, not every bank is able to do T-atomic, which is different from T0. So atomic settlement is not something that everyone can do at the moment, because the pipes are not plugged to do atomic settlement at the moment.
If I may, just
sure.
One question. I mean, the stock exchange, you're living from transaction fees, and the atomic settlement, would that create the same type of fees? And also, I mean, custody fees would be different. I mean, what's from the business? Is it not like you're cannibalizing your own business with this?
Well, that's why, as I said, first of all, we are not focusing on public listing, but on private markets. So we are first touching a market that is untapped by the exchange. And I mean equity and bonds. So that's really something that we are not cannibalizing. We are focusing on crypto assets or cryptocurrency, something again that the normal exchange is not doing. And by all means, we are not alone. Other exchange like Nasdaq, etc., are starting to do the same. So I think that we share more and more the same opinion. That's absolutely. But going back again to the Lugano bond, the two main things that are also good, again, back to the question around mobility of assets. The Lugano bond has been evaluated by Moody's with the same credit, with the same rating of any other traditional assets. It seems nothing, but it means that a digital bond is not carrying any technological or any other risk on top of a traditional issuance. That's not trivial. That's very important because an issuer is not paying more because he has no more risk to pay for. So that's very important. And out of that, the other outcome is that has been admitted, the Lugano bond to the SMB repo basket. It means that can be collateralized. So it means that you can give again another life to something that sometimes we see in just a pure marketing activity. So it's not that you just create and buy in a store. Now you can collateralize these assets and you can get the money again flow into the business. So that's, in my opinion, two very important milestones that we have achieved with the Lugano bonds. Thank you.
Perfect, Carlo, thanks a lot. I think at some point during your elaborations, you also started a great bridge to the next topic, right? We talked about the opportunities, but also the challenges towards a more tokenized world. And let's discuss maybe briefly two of the challenges that I personally see, and let's see whether you agree. And then in the meantime, I would like to ask the audience to also start preparing your questions. I think we'll have a bit of time to answer a few questions before I need to stop, because I promised Kobe I would not run over time, right? All right, so I think there's the challenges, the main challenges that I see are on the one hand side, I think it's lack of standardization, right? And lack of a joint, coordinated industry effort. A lot is happening, many players are moving, but many are building their own island solutions, and there's very little coordinated effort to build a joint infrastructure, because ultimately, if you believe it's an infrastructure game, then infrastructure basically relies on joint usage and the network effects of many participants using the same standards, be it token standards, be it compliance standards, or be it just a simple joint smart contract layer based on which we execute transactions. And the other thing I think you touched upon briefly as well is, I think there's a lot happening on the asset lag of the transaction, but there's not so much happening on the payment lag. I mean, discussions are happening, yes, on the CBDC side, but I think there is not so much happening on let's say, government-endorsed retail stablecoins. I personally appreciate a lot the initiative by the Swiss Bankers Association, who wants now to drive a coordinated industry-endorsed, and ideally then also FINMA, an SMB-endorsed CHF stablecoin in Switzerland to be used across all banks that will help then facilitate atomic settlement on-chain. So these two things, in my view, the lack of standardization and the joint industry effort on the asset tokenization side of things, and let's say a slower movement on the payment lag side of things. Are these also the two challenges that you're seeing? And now let's open the discussion to everyone and not go one by one anymore. Or do you see other challenges that are preventing the tokenization topic from taking off more instantaneously than it used to in the past?
I think a third point is regulation. So I think we need regulation, a coherent regulation, not only in Switzerland, but across different countries. And I would prefer if we had, I don't know, an international regulation for tokenized assets.
Well, I cannot agree more on the standard. As we have launched last week the ERC 3643 Foundation in Luxembourg, which is a non-profit association, to deliver the standard to the market. So we are open sourcing our technology to make it available to as many players as possible. We have already the big networks, public networks, Polygon, Avalanche, that is confirmed, Accenture, Capgemini, Invesco, MNG, Fireblocks, Copper, that are very active in this industry, that are joining this. I spent half of my career in banking and half of my career in telco. And if you remember, a couple of years ago, you couldn't send an SMS to your friend that was on another network, right? Because there was no standard. The moment that the GSMA came and started implementing the standard, the critical mass adoption happened, and everybody now is changing SMSs, roaming seamlessly. And this is what we need to put in place in this industry, and that's really the purpose of this association. is to make this ERC 3643 the standard for the industry, and let the industry decide how to grow the standard as the GSMA and all the working group in the GSMA industry enable to make this industry what it is today.
Couldn't agree more, of course, and thanks a lot for driving it out of Luxembourg. I hope many others will join the association. Anything else different from what has been said before? Otherwise, let me open the floor then.
For me, is
or Nicola, yes, please.
One word from my side, if I can, Carlos. Sorry for interrupting.
Bye, Nicola.
Hi, Carlos.
But you were still there.
Yeah, so I think one of the main things that is extremely important is people understanding what the advantages of this new technology, because otherwise they maybe won't use it, because currently it's slightly more cumbersome to use an asset on a blockchain than just to call your bank and say, hey, buy me this asset. So you really have to understand what you're winning out of it to take a little bit more effort than you might be taking today. And as we move forward, of course, companies like us need to make sure that we make it as easy as possible to use blockchain technology. As long as you're still thinking about which technology that you're using as a user, we are not there yet, and we're not ready for mass adoption yet. So I think we need to make it easier, and we need to really tell the people, make them understand what the worth or what the advantages are of this technology, and then make them forget about the technology in the next day, because we make it so easy that they don't even realize what technology they're using.
Agree. I hope we made a step to getting closer to more people understanding what the technology can do and what it can bring. So, Carlo, do you want to close it?
Well, I was absolutely on the same point. Education, I think we are part of the same, in the same journey, and we need to educate people, and it's about learning, and I want to use in brackets educate, because sometimes is seen as aggressive, but definitely education is important, and adoption, and I'm talking about your user experience. So I think that probably I'm old enough to remember when they launched the iPhone, and was probably the first device that didn't have simply a manual. So that's probably you don't realize when you open the iPhone, but that there is no manual inside. If you take a vacuum cleaner, has a manual. So the point is that when we will reach this level, then we will reach mass adoption.
Perfect.
Thank you.
That would be a great closing word, but I'll leave the floor for a question. However you want. Yeah, please. I think the mics are here.
Yeah.
Thank you very much. My name is Niklas Loos. I'm from Deutsche Credit Capital Partners. It's a German emerging private debt firm. My question is, we spoke a lot about, the single name tokenization here, right, of certain assets, right? It's pretty clear that the private market space is an interesting way, whether it's, people raising equity, or whether we're looking at the equity of, companies or bonds. What about the investment and asset management space, right? I think we haven't heard much here. And I saw your graph at the beginning. I was actually quite puzzled, because investment funds don't seem to be a target for tokenization yet. Now, if you think about it, right, it is really a way to digitalize, the entire asset management industry. Absolutely. I think it's a massive opportunity also in that space. So I would really love to hear, and we have colleagues here from Luxembourg and Apex, etc. Why are not, asset managers thinking about offering their funds in this region more? So, especially because it adds liquidity to an illiquid asset class, right?
Well, they are actually. That's really the work we're doing with Apex. Pavel, who's there from representing Apex today, can confirm that we had again another conversation this morning with one of his clients to bring his fund on board. When we look at tokenizing the asset management industry, it's the first part is tokenizing the limited partner interest, which is the easy part. So, and frankly, that's something that we can do at scale. Tokenizing the asset of the fund is more difficult, because obviously you just tokenize a part of that asset, which means that you have to do it in a way that is coordinated from a market perspective. So you need a way to identify those assets in a unique way, like using the ISIN or QSIP or any single identification solution. You also need to make sure that you do that in coordination with the owner of those assets, to make sure, again, that you incorporate any specific rules that you could find in a shareholder agreement related to that asset. So there's more complexity to tokenize the asset side and the liability of the fund. But definitely this is something that is on its way. And I mentioned Apex, but I could mention State Street, mention Boni, all those big guys, BlackRock. You saw the announcement of BlackRock. BlackRock has been doing a lot of work in the last weeks in order to promote this idea of tokenizing funds within this own entity. We were talking to Blackstone not later than a week ago. They want to do the same thing. So when you have those two guys, you know, that are onboarding this technology, you know that the market will follow.
Yeah, very interesting. Thank you.
Perfect. I think that was a great word to close the session. Thank you everyone for your attention.
So thank you very much for Thomas and for the whole panel.